Alright guys, it's FOMC day and we are on the last meeting for the Federal Reserve, okay, for the Federal Open Market Committee. If you have participated from on my webinar this Tuesday, you've noticed that I was right again. Just joking. But indeed, I was right. I've mentioned about the CPI. We did had a higher than expected CPI month over month. Not the core CPI, I mean the CPI month over month, okay? The consensus was at 0% and it came as 0.1%. So 0.1 above what expected. But my prediction for the CPI year over year was matched. I thought it would come as expected or higher, and it did come as expected. I knew it wouldn't come lower than expected, because the whole explanation I've explained it Tuesday, but just very freshening up very quickly here. We did had higher jobs, we did had higher people, higher hourly earnings, so people were getting better paid, and lower unemployment. So the money that people are getting would go to the market. So this would consist in a steady inflation or above inflation, and indeed we had a as expected inflation. Right. This didn't brought too much strength to the US dollar, but it brought the strength that I've talked on Tuesday. Was a negative strength because it was as expected. So indeed, I was right again, and we did so US dollar retracing back to US dollar index, the DXY retracing back, okay, and not going anywhere up. Opposition on gold is still running, so we are still short. I personally still short on gold. So I do believe that this trade can go a little bit lower still, because today we're going to have the FOMC meeting, and this is what I'm here. So before we go deeper into it, please subscribe to our channel, give us a thumbs up. I'm waiting for it. I'm waiting. You haven't gave a thumbs up yet. Okay, cool. And subscribe to the channel as well. Awesome, cool. And just turn it on that bell, so every time we post a video, we upload a video with the best contents out there, you get it fresh and clean and direct to your phone, just in one notification from YouTube, okay? And if you have any friends, please, we ask you to share this video with them, that may be interested on markets or fundamentals aspects, macroeconomics, and so on. You already know the drill. Now, let's go. So today, actually tomorrow for me, but most probably if you're on Europe or if you're on USA or something like that, today we're going to have the FOMC meeting. What is most important here is what Jerome Powell will say. Okay, right now we have a market conflict. Okay, we have Fed saying one thing and market participants pricing, thinking, having another story on their mind. So pretty tricky. And I'm gonna already, put this out there. Most of the times this happened, the market was wrong, right? And it was because the Federal Reserve, the Fed, has their own ways to see pricing different than the market participants, all right? So most probably that Jerome Powell will keep a hawkish approach to neutral, okay? And definitely they won't hike rates. And I'm calling it the end of rate hiking cycle, okay? So that's it. Finish from from Federal Reserve. And we do expect tonight a pause again into the FOMC meeting. Now, something that I really want you guys to pay attention is how the retail sales will come on Friday or Thursday, just depends on your time zone, for US as well. okay, because this will influence how the inflation will come to December, all right, and inflation from December will come in January and so on. So just remember that we are getting into the festive dates, and most probably we will have a little bit higher, a little tick upside to inflation, because people will be spending more money and therefore generating inflation. But I just want to, bring another thing up here. You guys can see on this screenshot here, this is from, of course, Twitter, you all know that. You can see that, US Treasury Secretary Yellen has said that there's no evidence that inflation is becoming ingrained or that there is a wage price spiral. As well, on this other print, we can see that she's mentioned that the US economy is on the path to a soft landing. So just coming back now, with those breaking news, I would say we are getting, I've mentioned this on Tuesday as well. I do most probably think that US will get on a soft landing and they won't have any, crazy breakdown or something like most of the economists are predicting, okay? I think it's too far gone, this. Just, bear in mind, it's US. It's not any other small country. But just pay attention on those data that I've mentioned and pay attention tonight on the FOMC. Now, coming back for today, we still have the UK GDP month over month from October. The consensus is no growth, 0, okay? Most probably we will get even negative or as consensus, okay? So this is my take for today, guys. Pay attention tonight. A pause from the Fed, but a hawkish tone. But remember, we need to see what Jerome Powell will say towards 2024, because the market is pricing 4.25% end of December, and we are right now in 4.25 to 4.5, and the Fed is expecting 5%. Okay, so just 5 to 4.75. So just make sure to pay attention what Jerome Powell will say tonight. Okay. So this is all from me. Trade safe ahead of the FOMC, and I see you in the next video.